Morning, everybody. Sorry, I hit the wrong button then. I went to the stream end instead of the member stream. How are you doing? Morning, FTNet. Morning, Evil. How are you? Um, just a quick overview of what we're going to do today. So this morning we're just going to go through the charts as usual, have a look at ADRs, RSIs. There's one, New Zealand, US. We're going to go through the zones, adjust all the zones with the Zone Trader account. And this morning's sort of content, if you like, is basically looking at how and why you're doing this. So what I've kind of called the stream is, why are you doing this? Part-time, full-time, setting a path and a target. So it's about this morning looking at what you want to get out of trading and putting a plan in place to achieve it, basically, because lots of people do this for different reasons. Some people, there's plenty of hobby traders I've met over the years who just do this because they love trading. They're never going to be successful at it. They're never going to make enough money to sustain a living, but they just love doing it. Yeah, it's like a lot of people bet on horse racing, but they don't do it to make a fortune. They do it to spend £5 at a weekend because they just like getting it right, sort of thing. So there's lots of reasons people do it, and you need to adjust your the way you approach trading based on what you want to get out of it. So it's just about looking at that today and looking at the ways to achieve it, because there's more than one way to crack an egg, obviously, and depending on what you want to get out of it, you need to adjust where you focus your time on learning to trade, what time frames you're focusing on, whether you should be doing prop or not, that sort of thing. So we're going to go through all that today, have a look at how I did it, how I moved from working full-time to doing this full-time. But not everybody's going to be able to do it the same way as I did, because I was lucky enough to be running a business and I had time on my hands. Time's the main thing in this job that you need to crack. So we'll look at all of that this morning. So just going to kick off, morning Mark, first thing today with news. So I posted this in the Discord group this morning. This is the first, what I would class as proper rumbling I've heard from Japan about intervention, which came out this morning. So Candace said it's desirable for the foreign exchange market to move in line with the fundamentals. Sudden divergences from fundamentals need correcting. This is the important part, need correcting. We need to intervene. Yeah, that's what you need to read into that. So the US dollar yen, as we know, the Japanese intervene if it becomes uneconomical for them to do business with the US specifically, not just the US, but in general. If the yen weakens too much, they do something about it. This was the last one we had. It was the largest intervention in history. And basically, we are back there. So it didn't have the desired effect. Whether or not they can do that again stands, we're going to find out, basically, aren't we? Back here, they were doing an awful, in the run up to this intervention, the Japanese were doing an awful lot of bond purchasing, US bond purchasing. Since the intervention, they've slowed their US bond purchasing, which means all you need to do is think about US bonds as ammunition. At any point when they have a large holding of US dollar, at any time they can sell that holding of US dollar, which weakens the US dollar, and they convert those bonds into Japanese yen, which strengthens the yen at the same time. So it's a double bubble. So they devalue the US dollar and they increase value of the yen, which is why you get the sharp, fast movement. They can only do that if they have the ammunition. Not quite sure how much they've got in bonds. So the question is, first, are we going to reach there? We are a couple of ADR away from there with 3 days of major US news coming. Are they going to want to do it, or are they going to try and use interest rates to control? We've got the Japanese interest rates coming up later this month, in a couple of weeks. No, next week, I think it is. And they may well just try to use interest rate rises to control strength in the yen as well. So there's lots of things that could happen, but this is how it always starts. Every intervention move starts with the Japanese moaning about the fact that the yen is weakened far more than they think it should be, and we will do something about it if you don't stop it. The usual impact we get is the market goes, "Oh, we better not." Yeah, we get a couple of weeks of, well, let's buy a bit more yen then. And then it just falls apart again. So we are really, really at the point of, we're 4 ADR away from basically new all-time highs. So just be aware that we're going to start to see this, I think, creeping in more and more day by day now, the Japanese complaining about the rates. So one of two things is going to happen this week. Today we have PPI. I was mucking about with news yesterday. Today we have PPI this afternoon, which could well either strengthen or weaken the US dollar. Then we've got CPI tomorrow, which could do the same. And then on Thursday, we've got retail and unemployment, which could do the same. If we get 3 bullish US moves in a row, it's going to move the US up into that intervention level. So this is an important week for those positions. So if you have any yen long positions on, just cover them, get stops in place just in case. I'm going to try and get flat on the yen. I've got yen running on this account, which is a stop loss based strategy, so I don't care. But on the Zone Trader account, I've got yen running long, and as you can see, New Zealand dollar yen. So what I'm probably going to do is try and get out of these yen positions. Most of them are in profit or break even, apart from the US dollar yen, which is the main one. But I've got that short anyway, so I don't care. So yeah, I'm just going to try and get a little bit flat on the yen, just in case that decides to move. So that's today's news coming up. That's the overnight news covered. The open this morning, DAX is long, FTSE is long. We had 2 hedges yesterday on both. Managed to get out of both yesterday. Did I get out of the FTSE yesterday? Can't remember. Yeah. So got out of both yesterday. So yesterday, both hedged, both hit 5R, both bounced. So nice, easy recoveries at weekly lows. So really easy bounce plays yesterday because the weekly lows were so close. So 100% profit on the European session yesterday. And US yesterday was good as well. So got the Dow was a clean break, banked, and NASDAQ hedged, but the Dow paid for the hedge. So all good day yesterday. Again, really good week. Good start to the month. Looks like we're going to hedge on the FTSE. DAX is attempting to rally up. So that's the gap fill done. So you remember yesterday I said I'll be looking for that gap fill play. If not, we'll bounce off the monthly low, the weekly low, and come up and do the gap, which we've done. So that's done. Now we've got the gap filled down, which looks like it's been completed pre-market. Maybe. So we've got clear air running up into ADR today. So if we do break long and continue long, there's nothing real. There's a lot of chop, obviously, but there's nothing to stop it getting up there. FTSE, we've got upside propulsion target to go to. Downside is going to be the lows. So this is going to hedge by the looks of things. So it'll be the same play as yesterday. Be looking for that triple bottom bounce. I suspect if we get there today, that it'll probably break it. So might want to be a bit careful on that one today. That's going to hedge. So we'll come back to those a bit later. Right, quickly whiz through the dashboards. I've just closed out 1.4%. That is New Zealand dollar CAD. So there's New Zealand dollar CAD exit from last week. And New Zealand dollar US dollar has just closed out as well. It's pretty much the same trade. So those two done. ADRs. So New Zealand dollar had a really big, strong morning. I looked through the news this morning. Apart from bond purchases, I can't see anything. couldn't see anything this morning about the bonds continuing to fall. That's the only thing I could see this morning. So markets had a big reaction to the bonds, I guess. So big rally. Big rally. So we'll pull back 50% retracement, potential continuation short on all of these. So I've also got Aussie New Zealand and Aussie CAD. That's coming down nicely against the New Zealand dollar. Aussie CAD is in profit as well, long. So I'm just going to hold those. But everything else is fine apart from this Aussie US, which is on its way now. I've got such a long way to go to get break even. So my break even is there, which is 125 ADR. That's going to be equivalent to roughly a 50% pullback on that leg. So I just want out of this Aussie US. So if I can get that back to break even today, I think I'll probably take it. I've got odd exposure on the pound as well at the moment. So I'm not sure what to do with those, to be honest, at the minute. I'm just going to let the next couple of days play out, but that Aussie US I want out of. New Zealand dollar yen ADR. So looking at the ADRs today, as you can see, it's all New Zealand dollar based. New Zealand CAD, ADR reversal opportunity. Same with the New Zealand Swiss, the New Zealand yen, and the New Zealand US. All ADR hits. So wait for some signs of weakness on these if you want to take an ADR reversal on them. If I will be getting in to New Zealand US short if we push beyond 125. New Zealand Swiss. Yeah, I won't take the Swiss or the CAD because the swaps are too high short. So that would normally be a short play, but it's 5.9. It's not far off, but I'm sticking to the rules. Euro New Zealand is also an ADR hit to the downside. So Euro struggling at the moment, but that strong New Zealand dollar coming down into the monthly high. That's an old one from 2 months ago. So it's basically this area here we're retesting. We did hit it once and bounce. This is the first retest of this level. So potential bounce play there off of ADR. So if it does break down below that level into 125 ADR, there's tons and tons and tons of support resistance levels, which are all pretty good on this rally up. Any of those could react to give it a pullback. So that's not a bad looking long opportunity. It's too expensive to trade though, so won't be taking that one. We've also got Aussie New Zealand. So Aussie New Zealand I'm already in shorts on. So yeah, long may that one continue. So looking for, this is obviously the 2-week low here. We broke down on the Monday. We gapped down on the Tuesday into that area. So this area here, we want to watch, and this area here. So if we can get down to 125 ADR, my target on this is 1 ADR, which is 38. So that is 36. I'm just going to stick some manual TPs at last week's low, just in case the EA, because that's very close to ADR target, which I'm using 1 ADR automatically, but manually I'm going to stick that in there in case we hit and double bottom. That's where I want to be out if we are going to bounce and pull back on this leg for the basically New York session and the London session if it gets down there. As you can see, there's no propulsion gap targets on this close now. Last couple are all the way back there, and then we're coming all the way back up into this one here. There's a little one there, but yeah, so that kind of movement if we're going to continue this New Zealand dollar strength. So there we go. There's your ADRs, RSIs, Euro New Zealand. Obviously it's New Zealand dollar, so hourly extension, 4-hourly extension. Whoops, wrong one. To the downside, we've got the pound New Zealand as well, and then we've got New Zealand CAD and New Zealand Swiss on the hourlies. All extensions. So all good opportunities for shorts, but they are against swap. So up to you on swaps really, but I'm not doing it. Right. So those are the ADRs and RSIs done. I'm going to quickly whiz over to the zones. Do I trust this yen weakness enough to get to that target, or do I just scrap it? I'm just going to scrap it. New Zealand yen I'm getting out of. I'm just going to delete the zones. I'm just staying out of the yen for a minute. So I'm just going to whiz through to the beginning. We'll go through them one by one. Aussie dollar CAD. So yeah, got the buys on, looking for a push up into target. Average is there. Looking for these highs, these lows. That area there is basically support resistance for a target. Aussie dollar Swiss, still not in anything, still not doing anything. I'm short on it. So it looks like we're going to go and get the second short on. We might come out, I looked at this one yesterday. We might come out of there. Has rejected it this morning. Looks like it's rejecting it again. Going to try one there. It does look like it's rejecting that level. This is kind of a failed breakout, isn't it? Look. High, 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 failed breakout, reattempt. It doesn't want to go beyond that level. So I've stuck, move the zone down. So obviously this is a piercing entry. So I'll be getting in short second entry on that. That'll bring the average up to there. So target to the downside. I'm going to stick down on these lows now. Obviously, when that trade triggers, wherever it triggers, somewhere in that area, it's going to trigger. Average is going to move up to there, so that will become the profit. Aussie yen, back to break even. It's too good an opportunity to miss just to get out of these yens at the minute. So I'm going to take that one as well. And I'm going to delete the zones. Aussie New Zealand, big profit on that at the moment. Down there. Oh, not a big profit. It's only a single trade on. So where's the target on that? I haven't set one. No, it's because it's gone so fast. So we'll get out on these lows. Aussie dollar, US dollar. Buys as normal. So it didn't manage to get down into the next buy zone yesterday. So target's going to be up at those highs still. CAD Swiss. Next short entries in, waiting, looking for a push down, leaving that alone. CAD yen, no trades on. Going to delete that just to stay out of the end for the minute. Swiss yen, back to break even on 2. It's a possibility of a bounce out of resistance here. So I'm just going to close that as well. I'm being overcautious on exposure on the yen probably. I'm probably way too early, but we've got interest. The reason I'm being overcautious with the yen is the interest rates are coming out next week. So it's next Friday, but I'm just cautious about them making a move before the rates are announced. They still haven't decided if they're putting the rates up yet. So we'll wait and see. Just better to be flat than in a massive parabolic move against you. As we know, the size of that intervention, it's just not even worth it. Evil, you said something and removed your message. I missed it. I was just about to read it. Ask again if it's relevant. It's something about wicks, but I didn't see what it was. All right. So you can simply move a zone to the wick of a running candle and use it as a piercing zone for entry. Yeah. So the obviously the entry criteria are where are they? Have I not got separate? Oh, they're up there. So I've in the Swiss Army knife. This is right at the bottom, and I've been using that for a load of development work this last couple of weeks. I forgot I moved it up to the top of this one. So yeah, enter if piercing into the zone. So basically, the EA works on candle close. Yeah. So as soon as a candle closes, it goes onto the next candle. As soon as that opens, it goes right. What happened in the last candle? And the logic is, if with a piercing, if the high of the candle is above the low of the zone and the close of the candle is below the zone, take a trade. So if you want to get in on the candle that's running right now, just move the zone. Like if I want to get in long here, if I do that, it will get in. Yeah. Depending on which entry criteria you have set, obviously. So I'm using all of them. So I'm looking for any kind of rejection around the area. I'm not being specific. But if you want it specifically to open inside the zone and close outside the zone, you would have to move this up to there so that the open is inside the zone and the close is outside the zone. If you're using the wick entry, the piercing, it just has to be down there, doesn't it? Because it doesn't look at the open, it looks at the low. So you can use anything you like, either way. I don't want to get in there, I don't think. I want to get in down here somewhere. So I'm leaving that for the minute. And it's probably not a bad entry, to be honest. I mean, that is a fairly decent rejection area, but I'd rather it get a little bit more stretched and go for the gap fill. It is going for the gap fill. So we've got potentially here a low. I missed that area. This could be the higher low going in here to do the gap fill. I mean, it's not a bad entry, is it, really? It's just that the low there, the next entry is going to be 55. ADR is 111. So 55 is the next space. So that's actually not a bad entry. I'm going to take that. I'm going to go for that one. So I'm just going to get in long there. Euro CAD, looking for shorts only. Sorry, bear with me. I just remembered I need to adjust these to trade in line with swaps, these yen pairs. Yeah, they are already. Okay, I'll go for that in a minute. So yeah, looking for shorts up there. So I'm basically looking for short entries. So what I'm looking for this one is a return to origin. Euro odd is bad swap long, so probably it won't enter. Is it? Oh yeah, you're correct. So yeah, looking to get in short. Well spotted. Some people, I mean, the reason I'm not actually, some people are not worried about swaps. I am, but some people aren't. So, that would be a good entry if you want to get in. And some people have got different tolerances for swaps as well. So some people might have it set to 7 or 8 or 9 or something. I've got mine set to 5. So that would have been a good entry if you wanted it. Buy taken yesterday. That's nicely in profit. It's Euro Swiss. So looking for Euro Swiss to push up into those highs. It's very range bound. I'm going to leave it to see if we can get up to there. This area here is a very interesting zone as well. So we got sort of a sub zone and then an additional zone up there. But I'm going to leave it running and see where it goes. Next buy would be somewhere down here. So we got this area here we pushed up into multiple times. Then we slammed through it, retested it, we pushed quite a way through it, but this whole area here is where that move started from. So I'll look to get into another position down there if necessary. Euro pound, got shorts on at the moment, nothing's changed on that, still targeting the highs. Euro yen, have an exit, taking it, deleting the zones. Euro New Zealand, not quite. It's 3 on that, isn't it? got a break-even exit on this. So this is a tricky one. So I've got a tricky decision. So this is a break-even exit. It's any single one of these highs could act as resistance. Obviously, this is the one that we're going to be potentially bouncing off of now. But we've just put in a high, low, lower high, lower low. So there is potential for a pullback into this area and then a continuation short. So this looks like it's potentially rolling over. Danger with this one is this is also a 38% retracement leg. Could be the next leg up. So tricky one to make a decision on. This makes me profit. This doesn't. But I've got 3 positions on it. New Zealand's on fire today, isn't it? So I'm going to leave that on and hope that we get down into that area. This is the obvious area that I'm looking for the next bounce play. So I'm going to leave that one where it is. Euro US, new long taken yesterday. Got to go out to the daily chart to find support on this now. So where I'm in here is obviously that level there. We've got this area here and that area there. This is a propulsion gap. So if they're going to fill the propulsion gap, that's the next logical area. It's a fair way away, and I'm getting a bit in the hole on this one because of this US dollar strength. But look at the size of the move. The size of the pullback is going to be at least 38%. So we should be back up into here, testing these areas here when we do pull back. So I don't mind if it does get down to there because the pullback is going to be highly profitable. So that's the next area I'm looking at. Pound odd, new long taken, need a new, oh, that's an easy one. There we go. So somewhere in that area there, we're either going to return to origin of the move, fill that propulsion gap, or we're going to test that high. So anywhere around there, next entry long. Exit on this one. So we've now got this low, that area there, which is previous support, turned resistance. So see if we can retest that for a short. Pound CAD, longs on. So nothing much changed yesterday. Got a new trade on. Oh yeah, it did, because I adjusted this yesterday afternoon actually. So so yeah, got another one on yesterday. We're bouncing out of these lows here. Next entry for me is going to be this propulsion gap, which was a retest twice. So looking for another retest of that area there. Looking for a pullback on that. Target for me now, I'm just going to adjust targets down. Now we've got that extra position on. Looking at that low there as potential upside turned resistance. So this area here, come over there. So we hit that area, tested it, broke it, tested it, bounced, tested it, bounced, broken it. We haven't come back and tested that area again. So that will be target to the upside to flip short, which will be a 50% retracement on that leg. Pound Swiss, new long taken yesterday. Out of the zone lows. So there we go. So this area here was the bounce point. Yeah, I mean, it's the old prove me wrong. We're in a range. Until you tell me I'm not in a range anymore, we're in a range up here. Yeah, but if we're not in a range, I'm going to need to get back in, and it's going to be down there. Pound yen, haven't got an exit on this one yet. Pound is incredibly weak at the moment. So I'm going to get out of this. Just get me out, break even. So if we can get to a break even position today, first sign of bearish price action, I'm out. trading the direction of swaps is right. So I'm just going to remove that buy because I don't want it. I don't want to buy it in a minute. Pound New Zealand, not trading, too expensive. Pound US, just missed my target yesterday. That was where I was looking to get in. Got to go out to the daily to see where it is, but there, just missed it. Unfortunately, so I didn't get that next position on, which means the average would have been nicely pulled down into there with that entry, but didn't get it. Missed it by a couple of pips. Annoying, but missed it. So yeah, just going to actually move the level up now to double bottom today. So if we can double bottom, do a yesterday's low double bottom bounce. Don't forget we've got news. It could go anywhere today. New Zealand dollar CAD, got longs on, miles away from getting out of this. Just one out of the New Zealand dollar CAD at the minute. So looking to get it back to break even. Trade's wrong. 1, 2, 3, 4, 5 positions. It's wrong. Just one out. Get me out. Break even. Don't lose me any money. New Zealand dollar Swiss, looking for a short exit up there. Screw it. I'm getting out. Just going to hit the button now, actually. New Zealand Swiss, close. Out. So next buy is going to be I mean, I might leave it there. So we got that high, that high, that high. We got descending highs there, basically, which we accumulated and smashed through. So looking for it to retest that area and continue back up into double top, although that is kind of the double top. Failing that, obviously, I'll be buying those lows down there. So that's first entry long there. New Zealand dollar yen out. That's done. New Zealand dollar US longs on. We pushed up nicely overnight. So I've got 6 positions on this. So again, it's not a good trade. I just want out. So if we can get back to there, I will watch that area as well. In fact, what I might do, because I just want out of this trade, I'm just going to move the zone down just to encompass the top of those highs there. So we got news today. What if we push up into there and we double top that? I want out. I will take that much loss on it just to get out of it, basically, because it's wrong. 6 positions. Just get me out. Don't lose me money, or lose me a little bit of money, but get me out of the position because I don't want to be in it. US dollar CAD, got sells on at the moment. This thing's completely sideways, looking for a push back down into that area. We're not going anywhere. Next entry is up there, but we haven't been there for weeks, so stuck. US dollar Swiss, new entry went in the day before yesterday. Next short is all the way up, so that was basically there. Yeah, so that's next entry long, short rather. Target to the downside is below my average at the moment. Again, I've got 6 on this, so just one out really, which is pretty much there, isn't it? I mean, this is the logical area to the downside. US yen. So I have sells on US yen. So this one, obviously, if we get the intervention, bring it on. Happy. But yeah, target at the moment is down here. So I'm just looking for an exit on this one as well. It's costing me a fortune in swaps. I do need to put another sell in as well. It's a bit close. I mean, basically anywhere in the propulsion gap is my next short. Somewhere in there. Don't know. It's whether or not we get to that level. That's the question. There we go. So those are the zones all done. So we'll see what happens with that one today. Right. One thing I struggle, and I hope Zone EA trading will help me be more rigorous. Not sure if it's the right word. And let the price reach the target, as I often tend to close before target. Yeah, so when I get scared of some possible pullback, when I get scared of possible pullback in profit, yeah, that's usually a sign of being over leveraged. If you're worried about, I see this all the time when I'm doing prop trading. If you get in, it's a nice little trend forming on the NAS, right? So if I get in to a trade, and blimey, that's the target, right? So we got this area here, which is this propulsion move down. So assuming they're going to fill that propulsion gap. At the moment, I've got a massive risk reward on it. So if it pushes up to there and bounces all the way back down here, if that scares you, you've got too much size on, right? So if I get up to there and I'm in $450 of profit, I can move my stop to break even and not worry about the trade and assume that we're going to go to where I want it to go to. If I go long with 3 here and I add 3 there and I add 3 there and it hits that and pulls back, my average is going to be there. The amount of money in profit there will be somewhere in the region of $1,000. That pushing back to $200 in profit will scare the crap out of me. But with 1 contract on or 3 contracts on, that pullback isn't going to scare me because the money's small. So usually if you are worried about exits, it's normally a sign of over leveraging. So if I'm going to add another one up there, whoops. My average is going to go to there. So you're moving yourself closer to the pain point. It's all about your perception of pain. The pain for me at the moment is 186 if it goes wrong. I can let that run all day with the pain point being 186. If I exponentially increase my size of position, the pain is faster. Therefore, the exits are faster. Yeah. So the idea behind the zone, and this is how I used to do it, it's not about the money. So what you should do is you shouldn't be looking at any of this. You should be looking at this, right? Where is price going? Price is going down to there or there or there. Let it do that. And you just have to trust that price will do it. And if you need convincing that price will do it, go back and look at previous charts and look at what happens when it gets to previous levels and show yourself that areas are always used for bounces. When it gets up to this area, it had a bounce. It didn't have a pullback from that area, but it bounced. It will always have a reaction. And it's the size of the reaction that we can never tell. But all you're doing is you're looking at where price is going to go, and it's just market structure. It's Fibonacci. If you want to forget the word market structure, use the word Fibonacci. It pushed up. It's going to pull back to 38.50 or 71.9. That's what it's going to do. It always does. Prove me wrong. It's all it ever does. Go back and look at charts. Go back 100 years in the past if you want. Market moves up. When it pulls back a percentage. It might pull back to here. It might pull back to here. It might pull back to here. But it's going to hit one of these 3. So if we have 3 targets to the downside, you get scared on that. But when it does that, you'll get scared on that. When it does that, you'll get scared on that. You're always going to be scared because it's always going to bounce. It's never going to go in a straight line exactly to where you want it to do, unless there's a news event, in which case then it'll probably bounce back and give you an exit there. You know, there is a no right or wrong in trading. It's just about looking for where price is going to go and adjusting your levels to where it's most likely to go. When you're looking at this, for the example, this target, there's 2 main targets that I look at or price will use: support and resistance, or supply and demand. Yeah, and we went through in the members streams. I did a session on the difference between the 2. If you want to second along on that. So we've got a little, oh, this is me live now. We've got a little session, that one. understand the difference between the zones. Yeah, go rewatch that. It's going to go to one of the two. Yeah, so it's either going to go to the origin of the move there and hit below it to put in a lower high, or it's going to double top it. Yeah, somewhere around this area. But, you know, if you draw the zone in, and the safest thing to do, if you want to be super safe when you're drawing your zones in, is go for the highest high around about, and then encompass the entire sort of supply demand zone. So, and again, this is discretionary, but that high candle there and then that big down candle there, if it's going to make a lower high, i.e. it's not going to double top or go above that area, it's going to find the sellers in this zone adding to their positions there, isn't it? So use the whole thing. You're not going to make as much money as if you're being laser targeted or you're picking a different area like that I was, but just let it go. And if it proves you wrong, let it prove you wrong. Scale in and keep scaling in until you're right, and you will be right at some point. But if your initial lot size you get in with is too big, you won't give yourself the chance to get there, because you'll get scared before you get there. This is partly what we're going to go through today, actually, is you know, looking at how you're going to make money and why you're doing it. And part of it is, you know, there's a good use for prop. Prop is a brilliant thing for certain things, earning money in certain ways. And I'll go through partly why I trade prop the way I trade prop, and how I trade the live accounts when I've got prop, when I've got funded. And it's a totally different way to what I'm doing now. What I'm doing here, $250. Brilliant. Break it even. Can't lose. This will either go now or it won't. So what I'm going to do now is I'm either going to make $1,800, which I'm on 155.8. So that's going to get me to 165. 8 1, I don't know, somewhere close to target, and it'll be about 1,500, $2,000 away from target. Or it's not. But if I was trading this as a live account right now, do you know what I'd be doing? Flattening it. Why? Because I just made $300. Think about what you want to do with trading. Is your goal to make X a day? Yeah. $166 a day in trading is $5,000 a month. I have got sitting there the equivalent of $7,500 a month in income if I press the close button right now. But my goal right now is not to make $166 a day. It's to make target, which is $9,000. So I'm going to let this run because I've got to make $9,000. So I either want to prove me wrong market or prove me right market. If you're going to prove me right, get me $2,000 closer to my target. But if this is a live account, done for the day. Totally different mindset. And that's partly what we're going to talk about today. But the probabilities are, if we look at the chart, let's look at an hourly on this, for example, just as an example. The probabilities are that we are going to return to either test that level there. Yeah, support, support, broke, resistance, resistance. What's going to happen there? Almost guaranteed, we are going to get a bounce. It's going to scare you. Yeah, but I've got that much bounce room. Look how much bounce room I've got. It can bounce all the way down to here, and I couldn't give a monkeys. But what I'm looking for is this propulsion gap that we've formed here to be filled. So my target is below that wick there, those lows there, those lows there, got lows here, lows here. So this area basically is an area of support. We tested it with a false breakout, didn't work out. News event slammed through it, or an open slammed through it. We haven't tested it yet. That's where it's going. So I can guarantee with 100% accuracy, one of two things is going to happen this morning. We are either going to hit that and bounce off of it, or we're going to hit that and bounce off of it. I don't know which, but one of those is going to happen. We'll let that play out. Let it play out for the day. It might not happen this morning. But this is the Globex session that shouldn't be moving so much. I think we're in earnings fortnight, actually, which is probably why we've got all this movement. Yeah, so earnings fortnight kicks off tomorrow. So we're moving into earnings fortnight. Actually, it kicks off next week, really. But yeah, we're moving into earnings, which is why we might have a bit more movement. But yeah, that's basically what's going to happen. So if I had 20 contracts on this now, I'd be watching this like a hawk. Absolutely watching it like a hawk. But I haven't. I've got 6 contracts on, and it's not real money. Totally different mindset. Which brings me on to the subject for today. So we'll go through what I want to cover today. Won't take too long to go through it. But if you've got any questions, chuck them out as we go. It's not even the over leverage. I use 0.2 over ADR. It's just the idea to see profit, even if it's small, turn into a drawdown, that sometimes makes me pull the plug. So don't look at your profit. I had exactly the same problem, right? What can't I see on this screen? Money. I have no idea. This is in profit. How much? No idea. Don't care. What's my focus? Where's it going? There? Or there? Right? So let it get there. It's going to go and hit that or that. And if it doesn't, the trendline junkies are going to win. What's going to happen if the trendline junkies are right? It's going to put in a lower low. So if it does a lower low, where's it going to go? Somewhere down there. So that will be my next entry long. Yeah. One of those two things is going to happen with 100% guaranteed certainty. Why? Because it's got a 50-50 directional bias. It goes up, it goes down. One of those things, 100%, is going to happen. Your job is to identify which. Or rather, your job is to identify both. Your job is not to get it right. The market will prove you right or prove you wrong. The market moves, you don't move it. You are a slave to the market, you are not in control, so you decide where's it going. And if you think it's going there, move your box down to there. If you think it's going there, leave it there. If you're undecided, go, I've got no idea. Do that. What's going to happen? As soon as it gets there, one or two things is going to happen. It's going to reject it, you're going to exit, or it's going to hit that, close bullish, move up, close bullish, move up, close bullish, put in a shooting star, and it's going to exit. That's the beauty of the zone trader EA, is it doesn't matter what price does when it gets here, you will get out when it turns bearish. And then if it's right swap wise, you'll flip short. But your job is not to exit the trades. Your job is to identify where it's going. Yeah, this is what trading is all about. It's about speculation. Where's it going? I've no idea, but if it goes up, I think it's going there. If it goes down, I think it's going to go there. It might use that wick, but that wick's too close, so I won't use that one. I'll use another area. That's all you've got to do. It's very, very simple. If you don't think about it, you can't overcomplicate it. If you don't watch your P&L, you can't get scared. So shut it away. My old mentor used to say to me, because I was trading at the time 4-hour charts with him, he would say to me, every morning, basically the strategy is very, very much the same as this. The strategy was check your charts in the morning, go to work, come home, check your charts in the evening, go to bed, wake up, check your charts in the morning, go to work, rinse, repeat, rinse, repeat. What it doesn't do, that process, is ever get me looking at the charts in the day. Because if I looked at the charts in the day, I'd see bull candle, bear candle, bull candle, bear candle, scared, not scared, scared, not scared. And I'd just close stuff. If you check it in the morning, wait for everything to go off in the day, 150 ADR move, come home in the evening and go, holy crap, close, it works. But if you watch every candlestick, it won't work because you'll get scared. Which brings me on to what I was going to talk about. Step away, keep watching. Yeah, so don't look at this because that's scary. This is a pleasure point. This is a pain point. Yeah. Remove both. You're not happy. You're not sad. You're just trading. Simple. It's not simple, but it is simple, if you see what I mean. So moving on to what we're going to discuss. It's nearly 8:52, so I won't take too long to go through this. But what I wanted to talk about was basically why you're doing it, why we're doing trading. So there's two sorts of camps that people sit in with trading and with what they want to get out of trading. The first one is get rich quick. The second one is change their lifestyle. Yeah. So with the get rich quick, obviously these are the people that are the gambling mentality, the people that want to come in and make a big fast buck, get that endorphin, rush going and make a load of money quickly. And then you've got the people that are unhappy in their jobs, unhappy with their life, unhappy with their financial situation, that want to improve it and do it properly. And I have been and come across all in my 15 odd years doing this. I was the get rich quick guy, and after 4 years of get rich quicks, I got out because it didn't work. So I scrapped it and went, screw trading, it doesn't work. And I got dragged back into it because I can't let things go without cracking them. Basically, you either have or you haven't got that mentality either. But the people that want to do it long term realize that the get rich quick isn't the way that everybody does it, and usually they discover that by looking at professional firms, banks, institutions, hedge funds, and looking at what they do and looking at the risk that they take. And the risks that they take are tiny. Yeah. So when banks and institutions are getting into large moves, they're losing 0.001% of their equity to start a trade. A little bit like what I did here. They press the button and try a tiny little one, see if it works out. It's working out. Let's put a little bit more risk on the table, but we'll adjust our risk. Then add a little bit more and just keep doing that. But they're scaling in and scaling out to moves. And they're not just going, get in, risk, reward, hopefully that will get hit, because it's too difficult to do. So for the people that want to make a quick buck, prop is great. And the people that want to make a side income, prop can also be great. But for the people that want to do it full time, you're going to need to plan how you're going to do it. So the first thing I would say, so I'm going to cover this in two ways, yeah, in two sort of sections. The first is going to be people that want to make a side income. Yeah. So you want to make enough money a year to pay for a holiday, or you want to make an extra 500 or £1,000 a month. So look at this as a case of getting an extra job. Yeah. So you got a 9 to 5 that you're working, which is going to limit what you can do with trading for a start. But rather than going and get a job in a supermarket in the evenings or working in a pub at weekends or something like that, you can do trading to try and make an extra income. You're going to need capital to do that with, though. So the problem with trading is people that want to make money trading usually haven't got capital. That's why they want to make money trading. It's a catch-22. You can't. If you haven't got capital, you can't trade, because you've got to have a bank of money available to use. And this is where prop obviously comes in and helps, because you can buy a large account with a small amount of capital. The people that want to do it full time are going to need to take a completely different approach to the way that they trade, in the fact that they are going to need a large amount of capital, and you're also going to need a large amount of savings on top of this capital to be able to move full time. So we'll take the first one first of all. So looking to do this as a sort of a side income. Yeah. So we're looking to make additional money. What you need to do, if that is you, is you need to decide what you want to make, because you're going to be doing a different type of trading with higher, usually slightly higher risk, normally stop loss based trading. And you're going to be taking the A1 type trades. So what you're going to need to do if you want to make an additional side income is you're going to need to set yourself a target that you're going to want to achieve every day, every week, every month, depending on the type of trading you're doing. And that is what you're going to aim for. So if, for example, you wanted to make an extra 5K a year, yeah, what you got to do, and this is pretty much the same as with full-time trading as well, you've got to split this down into what have I got to achieve on average on a monthly basis or a weekly basis? We're going to need to get the calculator out for this one. So if you're going to make £5,000, dollars, whatever, a year extra, yeah, divided by 12, you're going to need to make somewhere in the region of 400. I'm going to do this in pounds because that's obviously my currency. So you're going to make around about £400 a month. Divide that by 20 trading days a month. You're going to need to make around about £21 a day. Doesn't sound like a lot, does it? Making 21. So if we risked maybe £5 on a trade, probably going to be able to do it. Yeah. So first thing you got to do, and this applies to the side income and the full-time really, is set yourself a target that you've got to achieve and adjust your risk accordingly. So if you come across all these videos where they're saying they've turned 10K into 100K in 1 month or 2 months, that's fine. You can do that with gambling, but that isn't how you need to do it if you want to earn a part-time income. This is the glory hunters. If you want to earn a part-time income, realistically, you've only got to make £21 a day. Yeah. And that's going to make you that 5K. That could be a holiday. It could be you want to buy a new car, which is going to cost you £5,000 a year in payments, anything like that. Yeah. And all you're going to need to do that is use something like Zone Trader EA once or twice a day. So the side income people will mostly be trading on hourly and 4-hourly charts. Yeah, because the reason for this mainly is because you can't trade in the day. Yeah, so if you work full-time, which is normally people that want a side income, it is an additional income, which means it's on top of your job. It means that in the day, you're going to find it very hard to focus. You're either going to be looking over your shoulder because your boss is watching all the time, or you're just not going to have time to be in the market at the time when the market is moving. So maybe New York opens and things like that. So you're going to need to trade higher time frames. If you're trading higher time frames, you have to be a swing trader. Yeah, because what you're going to be doing is you're going to be trading daily movement, and then you're going to be looking at it every day and seeing what's happened today. So I was looking at a breakout of this, for example, and I got up, I went to bed last night, I set my breakout targets there, I woke up this morning and I had a profit. Yeah, I'm going to close out my profit, and now I'm going to set myself up to be a mean reversion trader, and I'm going to try and take that. But the risk that you're going to need to take here is going to be tiny. So you can give yourself a nice wide stop loss, because if you risk $28 on that to make $28 or $21 or £21 or whatever it may be, doesn't matter what the amount is, but you don't need to have these huge risk reward ratios with any trading really, but specifically if you're just looking to make a side income, because what you're looking to do is allow the market to move in the day enough to make you whatever your monetary target is, but you just give it room to breathe as well. So we know ADR is important because 58% of the time the market stays within its average daily range, which is why the dashboard is normally mostly white, because when it gets to these levels, it's obviously gone a lot further than it normally does on average in a day. So giving yourself just that much room to breathe, half an ADR, and then looking to try and get towards that £21 a day target is very easy, trading a handful of positions with a stop loss based strategy, just using support and resistance, or using something like Fibonacci, using anything basically. But mean reversion trading on hourly and 4-hourly time frames is all you're going to really ever need to do, and you're going to need to get something like 20 a day. Now if you look at prop, and I'm going to use prop as an example because it's an easy way to make that sort of money. If you look at prop as an opportunity for a side income, what basically you are doing with prop is whatever your drawdown limit is, that is what you're buying. So for example, if I want to be a part-time trader earning 5K, I'm going to need to have somewhere in the region of 1 to 2K, probably more, available as my capital, because trades are going to go wrong and I'm going to draw down into that. So you're going to need somewhere in the region of 1 to 3K to make yourself 5K, because all you're doing is you're looking for small amounts of money on a daily basis. Yeah, you're not looking to get into high risk. You're not going to position trade. You're not going to need anything that's going to require large capital, because you don't want to make large capital. Prop allows you to buy a large amount of capital for a very small amount of price. This account here is 150K. It cost me $149. Yeah, everyone can afford $149. And if you can't, then you're going to really struggle to make a side income out of trading. But so it spent $149, and what it's bought me basically is around about a $4,000 account. I think the drawdown on this is 4.5K. So I've bought 4.5K's worth of capital, because whatever your drawdown is what you get given. So once you pass a proper valuation, and as you can see, I'm getting fairly aggressive on this. You can see there, right? I'm up 300. I can easily just shut this now. All I've done is I've pressed a button on a breakout, and I've made that. It's very easy to make money. Don't forget, it's a 50-50 shot. Yeah, that's all it is. So all you've got to do with prop, and this is probably the best way to make money as a side income, is to get a load of prop evaluations, spend $500 or $1,000 on prop evaluations, and just trade all of the evaluations until you get one over the line. And you will by accident get one over the line, because just by pure flipping a coin 50-50 shots, some of those are just going to get past. Get in with high risk, get it over the line as fast as possible, and then as soon as you get funded on that account, drop the risk. Yeah, so if you want to make 20 to 50 pound or 20 to $50 a day, using prop is the easiest way to do it, because it's got a low barrier to entry. So let's say, depending on the size of account, let's just look at Top Step as an example. Just want to go to the Top Step website. So so to buy yourself a $2,000 account is going to cost you $49 a month. A 3 is going to cost you $99, and what I'm on, $149 for a $4.5 grand account. Yeah, so if you can make a sort of 0.5% to 1% gain a day, just taking one trade, have price move in your direction and closing it out, that's all you need to do. So this is the easiest way to get in, because if you want to trade with your own capital, you're going to need somewhere between 1 to 3K to try and make 5 grand a month. Obviously, these numbers are going to go up. If you want to make 10 grand a month, you're probably going to need more like 4 or 5 grand. If you haven't got 4 or 5 grand in the bank available to lose, because you could lose it, it's going to be hard to get in. But everybody's got $150 hanging around. Yeah, if they're trying to trade, obviously. You should have that amount of money. So use that. And if you were to spend 10 evaluations without getting one over the line, there's something seriously wrong. But if you were to do 10 evaluations without getting one over the line, it's a lot cheaper than sticking 3 grand in an account. And as soon as you've got it funded, you just literally hit the button with single contracts. You give yourself a load of room and you wait for that market to move up and down until it gets to that target that you have set. So to make 5 grand, I've got to do somewhere in the region of $21. That trade I've just taken, without hardly even thinking about it, went into $21 of profit within seconds. Yeah, it's really, really easy. But the thing you've got to do is be discretionary with it and shut it. Yeah, the problem with prop is it creates greed. Yeah, so you've got to just set those targets and stick to those targets. So for side income, anybody can do it at any time. You can use hourly charts or you can use prop. And with prop, obviously the difficulty with prop is time, because pre-market, it's mainly based around futures, most of it, and obviously it's New York session. But the New York session between 5 6:30 in the evening UK time and end of New York session still has plenty of movement in it. Yeah. So this area here, yeah, from when you get home to there, yeah, there's plenty of movement to make money. Yeah. So you can do this type of trading obviously in the evenings. Alternatively, obviously, we've got the just play support resistance, give yourself a wide stop and get in with enough money that's going to make you that small target. So aim for daily, weekly and monthly targets. The best is obviously to go monthly. That's the easiest way to do it. So what do we work out? Say if you want to get 5 grand divided by 4, 5 grand divided by 12, you're looking at making somewhere in the region of £415 a month. And just try and focus on getting to that target, taking the highest probability trades. So short that, long that, or long that. Yeah, very, very simple. All you need is a bounce that's going to make you 21. Yeah, forget trying to hit this. Break it down, trade by trade. I want to make 21. Give yourself loads of room to move. Yeah, if you get hit with a stop loss, give yourself a 1-to-1. So the next one, whatever your stop was, maybe 30, maybe $40 or pounds or whatever. Next one, just go for a 1-to-1. Yeah, but using a negative R ratio is the easiest way to make a side income. Yeah, not using a positive. Everybody's focused on, and this is the thing that has always, now I know what I know about trading after a long time. I don't know where the market got this positive R thing from. Yeah, that everybody teaches the same thing. You have to have a positive risk reward ratio. If you get into a trade, you have to have your stop at that level and your target has to be higher than that. Rubbish. Market moves up and down and up and down and up and down and up and down all day. All day. Put your stops outside of that range and target a small area inside that range. Your strike rate will go through the roof up to 60, 70, 80%. And you do not need to get anything higher than a 1-to-1 risk reward ratio. Yeah. It's all you've got to do. But you are going to have losing trades and winning trades and losing trades and winning trades. But overall, you're looking to come out with $400 in the end of the month. If you make your $400 to $500, stop trading. Yeah. Target done. Think about it like a job. If you want to do extra work, how would you get the extra income if you were going to go to work? You would get a part-time job in either a supermarket or a pub or something else. Yeah, a cleaner, whatever. What do they always offer you? Hours. Yeah, so you can work this weekend. We got shifts on Sunday if you want it. Yeah, if you've earned enough money, don't take the Sunday shifts. If you've earned your 400, don't trade anymore. Yeah, you've done it. Don't let the greed kill you. Greed is one of the biggest killers. So that's side income. Yeah. So set the targets, and they are so tiny if you're making a side income usually. So, you know, if you earn 30K to 50K a year, for example, and you want to make a side income is normally 5 to 10%. Yeah. So you're looking to make an extra 3 to 5K, maybe 6 to 12K a year. Yeah. You can do that very easily on hourly and 4-hourly charts. Yeah, look at the zone trader EA. I mean, this obviously, this is using fairly high risk at the moment. I haven't got a lot of capital in the account, but made 9% this month so far. We're on the 14th of the month, 2,100. I'm not doing anything complicated. I'm drawing boxes. Yeah, you don't need to know a massive amount about trading to make money out of trading, because trading is binary. Goes up and down. You have to be able to identify a box at the top and a box at the bottom. That easy. And when you're trading on prop, you have to identify where price is going to, and you're either going to get in there or you're going to get out there, because all price does is move from support to resistance, and it uses market structure reversals to change direction. Yeah, the 3-bar reversal or the M pattern, the W pattern. This is how the market reverses 100% of the time, virtually. I mean, you don't see the market doing anything but 3-bar reversals and W patterns. That's all it does. Yeah, but you don't know if it's going to work or not. So all you have is a ability to apply risk around that And this risk is all you need to worry about, because the reward will take care of itself. It will go to the next place, or it won't. But, you know, I am not going to lose anything here. I'm going to make $40 as a worst case scenario. Going to make $1,800 as a best case scenario. So let it do it. Yeah. So side income is very simple. The complex part is the full-time, which is what most people aspire to do. So the problem with having a full-time income, let me just use the other dash. It's got more white space. So if you want to make a full-time income out of trading, there's three things really you're going to need. First, let's draw them on. The first thing is you're going to need enough capital to trade with. So if you're going to do full-time trading consistently, yeah, that's the word, you should be looking to make somewhere in the region of 5 to 10% on average gain on your account per month. When you get into the upper echelons, you'll be making more than that, yeah. But most big traders, if they have a big year, they might double their account or 150% their account, yeah. But most traders that have a consistent normal year will be somewhere in the region of 50 to 100% gain on capital, yeah. So if you look at 12 months of the year, yeah, let's say I've got a 50,000 trading account. I'm going to double that to make 50k. Yeah, so I'm going to be making in the region of 4,000 a month. That's just under 10%. Yeah, so 10% is enough to double your account. So if you want to go full time, you need to first of all work out what you're going to earn, right? So I would be happy earning 50 grand a year, for example, right? So if you want to earn 50 grand a year, what do you need to start with? 50 grand. Because if on average you're going to do somewhere between 5 to 10% gain per month, you're going to need 50k to make 5 to 10 grand. Because otherwise, if you use 25k to try and make that, there's a chance you're going to blow your account, because you're going to draw down into that capital, and you need the capital there to work for you. So you need really a decent pot of cash. So whatever you want to earn a year, that's your starting capital. If you haven't got that and you can't see any way of getting that, you can't be a full-time trader. That's it. You can. There are ways to get your capital to those levels if you haven't got that much capital, which we'll cover in a minute, but they are very, very, very high risk, which is using compounding. But that's realistically what you're going to need. So you're going to need 50k to make 5 to 10. So you can, first of all, you need 50k in your account, and you're going to have realistic targets of 5 to 10%. The second thing you're going to need to become a full-time trader is 3 months worth of salary. Yeah. So if you want to jack your job in and go full-time, let's say first month and second month you have a break even and a small loss, and the third month you have a nice big win of 15-20%. How are you going to pay the bills and the mortgage that month? How are you going to pay the bills and the mortgage that month while you're waiting for the market conditions to be right for your strategy to make a profit? So you need 3 months worth of salary in the bank. For example, 4 grand a month we're going to make, so we're going to need 12k. So to become a professional full-time trader and start out, first thing you're going to need is 62 grand in the bank if you want to earn 50 grand a year. Have you got that? No? Tough. You can't do it then, can you? Because you can't just go full-time and jack your job in and become a trader, even if you have got 50 grand in the bank, because you still got to pay yourself when you're having a bad month. Look at last year. I had more bad months last year than I've ever had. Yeah. I had to have capital available to use to pay the bills, because you still got to pay the bills. So that's the second thing you're going to need. The third thing you're going to need is confidence. And this is the thing that money can't buy. Yeah. You've got to be confident in the strategy that you're going to trade, which means that you're going to need time. Because to get confidence, you need to have traded a strategy consistently for 3 to 6 months. If you can trade a strategy consistently and make money for 3 to 6 months, you know that you can consistently do that month in, month out. So if you're going to have the first 3 months being rocky, Yeah, you need a minimum of the same amount of time in traded demo accounts or very small account, say £1,000 account or $1,000 account, and you need to have made 5 to 10% on that over 3 months. So you need experience, confidence, and time in the game. So the path to becoming full-time basically is time. Yeah. Nobody I know in this industry that is full-time has spent less than 4 years learning to get to that point, unfortunately. All these videos out there where people suddenly teach you a strategy and everyone can trade it doesn't exist, is it? You're here because that's not happened. I'm here because that didn't happen to me either. So what you've got to do is find a strategy, consistently trade it for 3 months to, I think I just stopped out break even. Yeah, didn't work out. So yeah, so you need to trade basically up on an account for 3 months to give you the confidence. You need to then put 3 months in the bank and then trade live for 3 months. Now, the reason that 3-month buffer of money is there, of your capital, of what you need to earn to pay the bills, is because trading demo and trading live, very, very, very different things. So when you suddenly have real money on the line, you worry about things. And like Eva was just saying, every time it gets to a point and it has a pullback, he closes his trade. On demo, you didn't do that. Why? Because you couldn't give a monkeys if it pulls back. If it doesn't work out, screw it. If it does work out, brilliant, I'll post it in Telegram. Yeah. But when it's real money and you see £1,000 worth of profit turn into £500 worth of profit, you panic. You make completely different decisions with a live account than you do with a demo, which is why a lot of people get a strategy and they run with it and they go, I've found the holy grail. They try and execute exactly the same thing and it fails. Why does it fail? Nothing wrong with the strategy. The execution goes wrong, which is where EA trading takes over. Because if you have an EA following the rules you've set yourself that achieved that, it will just do that. It will do exactly what you have told it to do, which is why EA trading, I think, is the main focus that everybody should have, is automating strategies, because it gives you robustness testing, back testing, it gives you all the confidence. When you start forward testing, you have the confidence of the back tests. When the forward tests work out, you know that you can run it live and it's going to make money because it's done it in back testing, robustness testing, forward testing. There's no reason, unless the market completely changes the way it operates, there's no reason why it won't continue to work. And you also have the expectations set. Yeah. So I'm going to tell you the way that I did it, which is a little bit different. I went from being a web designer, earning money in a job. Yeah. And at some point, I was disillusioned with my job, as everybody is. And I wanted to either, at the time, I didn't really want to earn more money. I wanted to not be tied to the screen and have more freedom to do what I wanted to do. So I discovered trading, and my first son was born, and I was like, right, we're going to need a little bit more capital, a little bit more money a month, basically, and I want to spend more time at home. So I wanted to free up my time and I wanted to make more money. So I started looking into trading to make extra part-time income. Now, I started doing that, and then that, and then that, then that, then that, the usual thing, blowing accounts, making accounts work, blowing accounts, making accounts work, until I discovered a way of trading which was basically on higher time frames, which started to make consistent, profitable money. And it started to break even, basically, if it didn't make money. So I was at the point, and this is the key point I think that people get to. You start learning to trade, and you have something that works, and then it blows. Then you have something that works, then it blows. Then you have something that works, and then it breaks even, and then it doesn't blow. Then it breaks even, then it doesn't blow. Then it breaks even. Yeah, this is kind of the eureka moment for most people, because what they've done is, until you've blown 2 or 3 accounts, yeah, and then you realize why those accounts have blown, you eliminate what blew those accounts, and then what happens is you don't make money, but you don't lose money. You become break even. And then you find out how you squeeze that little bit of money out of the market, which manages to make positive alpha and give your P&L a boost. At that point, I was like, I can make a living out of this. But I need capital. Now, luckily, I had capital that I could put in to grow and grow and grow and grow. So I was running my own business, which was paying me an income. So what I was able to do was put a large amount of capital aside to make an additional income. So most people haven't got roughly what they earn available to start a new business. And that is the way, if you want to go full time, you need to look at it as a business. So I started a new business, which was my trading business. I was still doing my web design business, and I ran the two alongside each other for about 2 years, so that I had that buffer. If this all went wrong, I can still pay the bills, I can still pay the mortgage, I can still carry on, and I'm just going to lose the savings. Yeah, that's the difference. If you have that ability where you have spare capital, all you need to do is change your mindset on trading into being a business. Yeah, so your business has expenditure and it has income. So your income is your profit, your expenditure is your risk, your capital. And you need to just readjust your mindset so that you are looking for your business to turn over a set profit per year. You're going to have bad months, you're going to have break-even months, and you're going to have phenomenal months, and you're going to have average months. You know that because you've traded it and you've tested it and you know what happens. You've put Quant Analyzer up with 2 years worth of back testing and seen that there was 5 months in that 2 year period where it made a loss. So the first time you have a loss, you just carry on. Yeah. So that's the way that I did it. I was fortunate enough to have a job that paid me money. I was running a business which basically was generating enough money that freed up my time. I put my time into learning to trade, and then I got trading to make an income that was enough for me to go, if this blew up tomorrow, my web design business, I reckon I could crack this. But I ran them both alongside each other for a long time. And what I've done is I've basically transitioned. So if you say that is the P&L of my web design company, this was the P&L of my trading. When the P&L of my trading got like that, what I did was I let the P&L of my web design company do this. I stopped getting new customers on. I stopped advertising. I started running this down, which freed up more time for me to concentrate on that. And there's a crossover point where this became more profitable than that. And that was it. But that took 4 years. Yeah. And this point here was when I became break even as a trader and profitable as a trader. So I started to start making amounts of money. Yeah. This period here took 4 years. This whole journey has taken 15. Yeah. But it's a long-term thing, and that's what you need to do if you're going to go, if you want to go full-time. You have to have realistic expectations. You are not going to, if you have a 10 grand account, you are not going to make 100 grand a year consistently. You're not going to do it. Now, there are ways to compound up to your accounts. Morning outro. I'll have to go back and watch over what I've missed. Yeah, 52 minutes in, we started this education bit, if you want to do that. 52 minutes of analysis. Oh, you got a new coloured star. Well done. Nice and green. Turquoise star. I like it. Yeah, compounding. So if you want to do this full time, you're going to need to focus on how you're going to get your capital together. So remember, if we want to earn 50 grand a year, we're going to need 62 grand to start with, right? You can do it with less, right? So if you want to make 50 grand a year, you can do it at 25, but you're going to need to have twice the risk here than here. Yeah. And it's all about keeping your psychology under wraps. Yeah. If you see your P&L in 28% of drawdown, you're going to start making stupid decisions, panic, and lose faith and lose confidence. If you see your account in 12% of drawdown or 10% of drawdown, you're going to be fine, because that's what happens. So if I've got a 50 grand account, I know it's going to go 5 to 8 grand into drawdown. I'm going to lose 5 to 8 grand of it. It's called working capital. Yeah. Set up a business, go and open a shop. What do you need? Stock, premises, staff. Before you even started, you spent 100 grand. You're 100 grand in the hole before you open your front door. With trading, we don't have that. We have 50 grand and we start trading. Now, we could go 10 to 15% into drawdown on the account, but that's what we're using to make money with. Yeah, that's normal. So if you haven't got enough capital, you need to get capital. So there are ways to compound your account. Compounding your account means that basically what you're doing is you're taking, say, 10 grand's worth of money that you've got, and you're going to try and turn that into 20,000. And you're not going to spend any of it. You're going to turn that 20 into 40,000. And then you're going to turn that 40,000 into 80,000, and so on and so forth. But you don't need to compound very much. You need to compound maybe once or 1.5 times or twice to get to enough capital that you're going to be able to hopefully achieve your goals and targets with. So that's the first thing to do. Set that target. I want to earn 50 grand a year. I've got 15 grand in savings. How do I turn that into that? Because that is where I'm going to start making my living. This is where I am now. You need to have a path to get there. Borrowing money is not the way. Yeah, when I started trading, I started putting money on credit cards to fund my trading account. So I was getting into debt to get into a blown account. So what's that do? 2x my debt. Do not borrow money. If you haven't got it, you can't do it. Simple as that. Yeah. What you're saying, if you're going to do something like that, is I want to start a business on the high street. I haven't got any money. You can't start a business on the high street because you haven't got any money. But I want to. Tough. I want a jet. I haven't got one of them either. I also want one of those. I haven't got one of those either. Yeah. You just can't have what you can't have. But compounding, basically, the best way to compound is to 2x your risk and hope. So let's look at risk for compounding. So if you have a 10k account, I'm just using these numbers because most people can't live on less than 30 to 50 grand a year, right? So you're going to need to earn 30 to 50 grand a year. Pound New Zealand is just ADR. If you're going to if you're going to need to earn 30 to 50 grand a year, we're going to assume you're going to need to get to 30 to 50k. Let's say, for example, you've got 10 grand in your account. Normally, we would be using 0.25% risk or 0.5% risk. So what you need to do is whatever strategy you're using, whether you're using position trading, using a stop loss strategy, if that strategy returns on average 5 grand a year or 10 grand a year, and the drawdown on it is, say, let's pick, let me do this properly. Let's pick a back test and look at an exact example. Right. So this is a backed system parameter permutation test for the embedded RSI strategy, right? So this is risking half a lot, and it's made 10,500 drawdown to make 53,000 profit, right? So if you have 10 grand in your account, you can't do that. You cannot use that set file, assuming that it's going to repeat itself. You cannot use that set file to make money with, right? Because it's going to blow your account. So what you're going to need to do is, if you want to use that set file, half that. So you're going to use half of your account to potentially make 26 grand over 2 years. So in 1 year, you will have doubled your account up to 20k. Okay. Assuming obviously market conditions are similar to back tests and everything goes as planned. Second year, or when you get to 20k, doubling the account, you can then look at this and go, right, now I can up this to half a lot, right? Because it's only going to draw down by around 10 grand. So it's going to draw down 50% on my account. So you can up your risk as you go, knowing that you will not blow the account, but it will draw down. You've got to ignore the drawdown. And that's going to make you 53 grand a year. But we don't need 53 grand a year. We just need another 20 grand a year to make us a 40k account. So that is 2 years worth of back testing, basically. So we should be able to, in another year, get to there. Yeah. So what you need to do is set yourself realistic targets for compounding. If you're going to compound an account, you're not going to be able to do it super fast, right? It's still going to take 6 months to 12 months to double an account, even with high risk. Now, obviously, high risk comes high danger of blowing the account. So the more risk you use, the more chances you have of blowing it. So you need to find a robust strategy. So something that has a high return on drawdown is what you want to focus on. And do the back testing to find out what, ignore the percentage drawdown, ignore this. It doesn't matter when you're compounding, what that figure is there. What matters is, if I was to risk half a lot on the pound US dollar in this case, on a strategy, how much money do I need to double my account? That's what you need to be focusing on. And this is why compounding, I don't think, is something that is sustainable, because these figures here, let's just take this back test an example. These range from 9 grand to 17 grand. You've got another 17 there, 10. So the average is about 10, but you've got outliers here at 17 grand, 17 grand. They're all making roughly the same, 50 grand, 59 grand. That one made 35, 69 grand, 49 grand. So they're all making roughly the same amount of money, but the drawdown ranges from 9 grand to 18 grand. So how much money do you need to trade this strategy? More than that, because the chances are when you get to 16 grand, you're going to get margin called and not be able to get the trade on. So you're probably going to need 20k in the bank. Right. That's your starting capital to trade this particular strategy. Or if you want to reduce the risk down to 0.25 lots, you're going to need less, aren't you? So you probably only need 10k to start off with, because all these drawdowns would be halved. There'd be 4.5s, and those would be 8.5s, 9s, that sort of thing. So that's the reality of it, of becoming full-time. And obviously the first decision to make is, am I looking for additional income, or am I looking to go full-time? Additional income, you can start today, right? You don't need to build capital, because to make additional income, you don't need a massive amount of capital. We've just got to make a small amount of money a day. So if you've got 1,000 in your account, not hard to make 25 a day, is it? That's 5 grand a year. You can do that with 1,000. But if you want, but it's going to need a fairly high risk, and we are going to draw down into that 1,000 probably. But targets need to be set daily, weekly. You just want to make 400 a month or something like that. So it's a case of giving. If you want to be a part-time trader, it's all about giving the market room to move, room to breathe, and using high time frames to give you that movement. If you want to go full-time, strategy is irrelevant. All strategies will produce alpha if they will produce alpha. I have 1,000 strategies that will generate me somewhere in the region of a 2 to 3R return a year. It's hard not to. If you were to get in at random and put a half ADR and a 3/4 ADR TP and stop, just because the market goes up and down, you're going to get a higher return on drawdown and a higher profit, and it will long term give you profit. It's really easy to make money trading. The difficult part is getting the capital together and controlling the risk. EAs will control your emotion. That's not a difficult thing to do. Just automate an EA and stick it on a chart. This one that I've got running here made $274 yesterday. It's up 719 today. It's doing the back test of the trend pullback strategy. That's all it's doing, but it's doing it automated. I'm not worried about it. I'm not looking at this now going, holy crap, that's 3 times yesterday's profit. I need to close these trades, because I've got faith in the back test. I've run the back test over many, many, many years. I've forward tested it over 2 months, and now it's going. So it's going to generate money. I know it's going to generate money, but you've got to basically have a plan of years in place if you want to go full time. Because unless you can convince yourself, and this is the same with prop, if you can't convince yourself that you can do this on a demo account for 3 months, you are never going to do it live. This is a totally different kettle of fish when you stick real money in that account. So that's basically all we're going to cover on that. The reason I wanted to cover that is because I'm getting asked a lot, and I've always been asked a lot, to be honest. It just seems to be a bit more prevalent now because it's January, it's new year, new me, new job. Yeah, everybody's got New Year's resolutions, and there's a lot of people saying, how much money do I need? And that is the reality of it. Yeah. And this is why trading isn't for everybody, because you will lose and you will blow accounts regularly. Yeah. And you will go into drawdown regularly when you start trading for the first 3-4 years. All these kids out there that are like 25 that you see on YouTube who are like, I'm 25 years old and I've made $1 million. No, you haven't. Your dad's got a trust fund. You've got a YouTube video and a marketer and an unlimited amount of cash behind you. And you've managed to press the button at the right time and shed loads of money on Bitcoin. That's not trading. You're not going to be around very long because that isn't how it works. Yeah. This is the problem we have now, is our mindset is completely flipped. But look at the banks, look at the institutions, and look at what they do. Hedge funds regularly go into, pension funds regularly go into 30 to 40% drawdown on the fund, because the market will move up and down all the time. Yeah, they are using capital drawdown to make alpha, which means basically you have an amount of money in your account and you are using it to invest into the market, waiting for the market to give you a positive return. That isn't something that's in your control. Time when the market comes is not in your control. So you have to give yourself time in the market to make money. It's the only way you're going to do it. And unfortunately, that isn't the way that we are now programmed by YouTube to do it. But that is the real way it works. Morning, I'll watch the replay for sure. Interested in topic. Cool. Glad you made this. Was undecided as to what to do after uni, as I finished this year. Was thinking just work part-time so I could focus on trading. Yep, exactly. So if you're going to work part-time, you're going to be a part-time trader. If you're a part-time trader, that's what you're going to focus on. Yeah, making a part-time income. There's a crossover. Like I said, when your income, let's say that's naught, that's 100 grand, right? If that's your income from your job, right, and you then start trading, right, and this can be on demo or it can be on live. Ideally, it should be an amount of money that is realistic. So when your income from your job and your income from your trading are the same, this is the point, I think, that you should consider going full-time as a trader. Yeah. But to get your income from trading to the same point as your income from your job, you should be making roughly the same per month. Yeah. Unfortunately, with trading, you're not going to have every month be profitable, which is why you need 3 months of money in the bank, because you're going to have losing months. I always have losing months. Every year there's losing months, right? So the question is always going to be, can you turn around and go, hello, Mr. Mortgage Provider, I've had a bad month. Is it all right if I don't pay the mortgage? Sorry, I can't pay the electric bill this month. Is that okay? No, it's not. You can't not pay your bills. You need to have capital in your trading account, and you need to have capital available to pay the bills. And then you're going to draw out of your trading account, top up your bank account, and that is going to last. So 3 monthly withdrawals is typically what I aim for. I don't take money out every month. I aim to take money out every 3 to 6 months. Top up your pot of cash. You spend that cash. Your capital is your capital. Think of it like a business. If you're in a business and you've got 100 grand's worth of working capital in your business, you have to pay yourself every month. So if you pay yourself 5K every month, your business needs to earn more than 5K of profit to continue paying you 5K of profit every month. Now, if your business earns 100 and gets its capital up to 130K, you could draw out 30K and not pay yourself 5 grand a month. And when the 30K in your own personal bank account gets down to 0, you take some more out of the business. This is your business. This is your personal. Your personal and your business have to at least be balanced. Otherwise, you can't draw out of this. If you draw out of this, you have to reduce your risk. If you reduce your risk, you're reducing the amount your business can make. Yeah. So there's this point where you have to get to there. So if you're leaving uni and you're going to go and get a part-time job, and that part-time job is going to earn you 2 grand a month. I don't know. I have no idea. I haven't had a part-time job since I worked in a pub when I was about 18. But if it's going to make you 2 grand or whatever, you've got to make that a month in trading, and then you're making a decent amount of money. But until your trading gets above that level, I would say you probably want to stay doing both. If you do that for 3 months and consistently make the same amount of money as this job, if you put more time into this by diversifying into other sectors like opening range breakouts on stock indices and things like that, you're suddenly going to make more money. Multiple strategy optimization is basically a really good way of adding more profit, but adding more profit means adding more capital. So if you run the ORB strategy, if you run the SIH, and you run position trading as an RSI and ADR, and you run zone trader, for example, there's 5 strategies there. Each of those strategies needs a capital allocation. So I have roughly 25k in there. I've got roughly 25k in there, and in here I have at the moment 50, but I also have 50 waiting. So I've got floating capital which can go here, here, or here, depending when it's needed. So that's a business, that's a business, and that's a business. Every single one of these strategies is a separate business. Some businesses aren't going to do very well this year. Some businesses are going to do fantastic this year. I don't know what the market's going to do this year. So if Trump gets in and he sends the US dollar wild pretty much every day, the stock indices are going to go absolutely crazy. If the stock indices are going to go absolutely crazy, these are the guys that are going to pay my bills this year. This guy is probably going to get squeezed to hell and hurt. This guy, don't know. How is market going to react to support, resistance, supply, demand with Trump effect? No idea. But it may do well, it may not. But if you've got diversification of strategy and you've got 3 businesses running, you've got much more chance of surviving, because and it's the same thing as, like I said, there's 3 types of strategy. If you run a mean reversion strategy alongside a breakout strategy, alongside a trend strategy, it doesn't matter what the markets you're trading are doing, one of them is going to be clearing up. The other 2, as long as you're managing risk, will either make small losses or break even. But the one that makes the money makes the money. ORB works this month on ORB so far is turning out to be probably the best start of the month it's ever had. It's just clean break, or it's hedge recovery every single day. It's just clearing up. Position trading, doing well. January's doing pretty good. I'm up 7%. Zone trading, I'm up 8%. So in total this month, I'm having a 20% month at the moment. We're only halfway through the month. Phenomenal. But it isn't going to be like that. I'm going to have -7s. I'm going to have -10s. At some point this year, I'm going to have a 10% loss month. I've never not had a 10% loss month. But it's all in the equation. I'm expecting it. And this is part of the expectation of trading, whether you're doing this as a part-time job, as a side income, or whether you're doing it as a full-time trader. You have to do the back testing, the robustness testing, and the demo trading for a period of time to understand what is going to happen. The market is going to go wrong. It's not going to do what you want it to. You're going to get into squeezes on stuff that are going to go and they're not going to stop. And you're going to be the wrong side of them. I'm not in this, but if I was, I'd probably be out of it because it had some pullbacks. But you get the point. You can't tell what the future is going to hold. The market will do what the market will do. But as long as you've got different businesses running, that is the ideal. So it's hard enough to crack one strategy. It takes most people 12 to 18 months, I would say, to understand how trading works, let alone find a strategy that suits them from a time frame perspective, a frame of mind perspective, or a type of thing that they like to do, mean revert, breakout, trend, whatever. It takes a couple of years for you to get to that point, let alone then try and introduce more strategies. If you can get one that doesn't blow your account, you've succeeded. Yeah, that's how hard it is. So becoming full-time is not just hard, it's really expensive. Yeah, so there you go. So that's basically it from a job perspective, if you like. And you know, that's real world. But you see real world here every day, don't you? You see me sitting here not making money for days on end. I can't make money if the market doesn't move the way the market moves. The way I want it to move because of this strategy. ORB today. I don't know. Let's have a look. What's happened? Yeah, I'm not making any money on ORB today. Why? Because it's not moving. Yeah. Again, this is the thing with trading. It's the only job in the world where you never have 2 days the same. Maybe being in the police or something like that. But you know, there is no way to make money with a momentum breakout strategy today. Can't do it because it's not breaking out with any momentum. So you have to have this experience of it's going to go wrong on a regular basis. And this is why I say manual intervention, even with EAs, is important. If I suddenly see this after 3 hours get to $230 in profit, I'm closing both. Now, the EA can't make that decision. It could be programmed to make that decision. But when is, you know, it's a discretionary thing. And it's experience you can't buy. And when you want to go full time, you have to have had that experience. If you haven't been through the mill and been beaten up by every type of market condition there is, you will, when the first time you get to the point where something beats you up, you're going to get knocked down. The knockdown is usually a blown account. You've got to blow accounts regularly. This is why everybody wants to start small. No one goes in with big bucks. If you're going with big bucks, you've got to be able to afford to lose every penny you put into trading. Same as a business. I don't know what the statistics are at the moment. I'm just going to go with the UK. No, I just want to know the statistics. Yeah. Right. What's the statistic in trading of people that fail? Yeah. This is spot on, isn't it? 60% of traders lose 60% of their account in 60 days. It's a business. Yeah. They will go bust. You need to go bust multiple times. So if you put 500 in and you go bust, you'll know why you've gone bust. If you put 1,000 in, the next time you go bust, you'll know why you've gone bust. That mistake won't happen again. That mistake won't happen again. There are a billion mistakes you can make in trading. When you get to break even, that's the point where you've eliminated the things that make you go bust. Now you can focus on the stuff that makes you profitable. Time. It's the only thing that you cannot buy. And that is it. Experience. You've got to have that. So that's interesting, isn't it? 60% of startups fail. Same with trading. 95% of traders lose money. I'm going to try another one on that. I don't usually trade Globex. I have started trading it a bit more, but you tend to get, sometimes you get nice grindy sessions in Globex where you can just grind yourself up to target. Right, any questions on that? Although now I'm thinking maybe just work like whatever. Save some money up to build up an account. Yeah. So yeah, exactly what I've just been saying. The best thing to do is not to work like hell to build up a pot of cash to trade with. The best thing to do is to trade while you're working with a small amount of capital. Prove to yourself you can do it. Yeah. If you can work for 6 months and trade for 6 months, and at the end of that 6 month period, that is not a blown account, yeah, you can do it. But if you work part-time and trade part-time, and this is a blown account, a doubled account which blew, you can't do it. You cannot do it. So there's no point in saving up a load of money. Don't start with big capital. Start with small capital. Do it. Yeah. Start with demo. My mentor told me to trade on demo for 6 months. And after I've had 3 months, so what basically his kind of mantra was more along the lines of, look at that as a year, right? And you need to be trading on demo for this whole year, okay? Split the year up into 3-month cycles, okay? And as soon as one of these does that, yeah, you've cracked it. You now know what not to do. When the second one does not get down below the first one, you're ready. That's 6 months on demo. Okay. Then, and this is where the 3 months comes from, put 3 months worth of your salary in your account, in your bank account, to pay the mortgage, the bills, food, clothing, kids, whatever. So whatever you spend a month or you earn a month, that goes in the bank, right? And then do it again on demo. Or go live with a small account. And if at the end of that period, it hasn't gone below that, you're live with real money, real skin in the game, completely different mindset with capital. And that is the process. That's literally all you've got to do. It's very, very, very simple on paper. But the thing that people cannot do is spend this amount of time. It's the whole, I want it now. We are conditioned, I think, as human beings, aren't we? I ordered something from Amazon yesterday. It arrives this morning. I ordered something from Argos. It arrives this afternoon. Yeah. You need everything done now. I need to learn what this is. You Google it. It's there. The information is there. Everything you learn and you do in your life is instant. Everybody expects the money to be instant as well. It's not the way, is it? Could you pilot a fighter jet? No. Can you fly a plane? No. What have you got to do? Learn. How long is that going to take? Year, 2 years? Right. So you can have a fighter jet and you can be a pilot, but it's going to take you 2 years to get there. No, I can't be asked. I'm going to get Microsoft Flight Simulator and do it now. That's the real world we live in, isn't it? That's why trading's so hard. I've been running the POS Trader now since November. Had my first bad squeeze this week, Aussie US and New Zealand US. Which is starting to unwind. See, I'm in Aussie US with you. So what have you learnt there? Yeah, I'm changing charts. New Zealand US, Aussie US. What are you noticing? It's the same. Yeah. So what do you now know you shouldn't do? Trade both because you've got confluence. Yeah. That's the New Zealand US. That's the Aussie US. You've just traded double exposure on the same trade. Bang. Excellent. I know now not to overexpose myself on the Aussie and the US at the same time because I'm trading the same thing. Lesson, right? So now that P&L that went like that, the next one will go like that. So that drawdown will be 50% smaller than before because you're not going to do both of those at the same time. Experience. This is you cannot buy this. It's just you've got to do it. Learn it. So there's one thing you're not going to do now in the future is if you get into Aussie US, you're not going to get into, or what you're going to do is if you're going to trade both of those, carry on. 50% risk. Half your risk, you're going to get into the same amount of drawdown. So glad you experienced it on demo first. Yeah, experience. It's all it's about. Expectation. It's more about expectation. You know, people say to me, Jesus Christ, you're in 6% of drawdown. I said, yes, because I've been there for 5 years. I just know what's going to come. And if it doesn't come, I know what I can do is I can close that off and go, holy crap, that was a bad month. But it's because I've been there. And until you've been there, you can't teach people. You can teach people. And, you know, the bootcamp, I give everything very woolly. I'm very woolly in everything that I do because I don't know. There's no one that knows. All these people that come out and say, this is going to happen, that's going to happen, this is where this is going to go. They haven't got a bloody clue. They're just guessing. And what they rely on is then guessing it right enough times for someone to go, holy crap, this guy's got the holy ground, and buy his crap. That's what it is. It's all it is out there. It's just full of crap. When someone starts to look at for how to trade, most results are buy the Lamborghini in a month of trading. Yeah. And don't get me wrong, you can do. Yesterday, I was watching Top Step TV, which I quite like doing now when I'm trading in the afternoons. I quite like watching Top Step TV because you still pick up bits and pieces and you think, oh, that's a good idea. And I'm always looking for new strategy idea generation. Euro pounds just hit ADR. You get. What's just happened there? Pound again. Oh, this pound. Dying. So yeah, I was watching Top Step TV yesterday. And they do a section on it where they have biggest payouts and who's up today, the biggest P&L. And there was one guy in an XFA, which is basically a demo funded account, who was up 95 grand yesterday. Yeah, 95 grand. It's a 150k account, right? So he was up 95 grand on a 150k account. Yeah, that's not trading. That is going 15 contracts, buy. It's gone up a couple of ticks. 15 contracts, buy. It's gone up a couple of ticks. Pop. Close. 95 grand. Thank you very much. You can't sustain that, but you can buy a Lamborghini with it. Yeah. So a lot of this stuff that you see out there where they're selling you the dream of the Lamborghini is achievable. I can do it as well. I can press the button right now. Yeah. There's one or two things going to happen. It's either going to invalidate this trade idea by breaking that low, or I can hit 15 contracts there, 15 contracts there, 15 contracts there, 15 contracts there and there. And by the time we get to here, I will buy a Lamborghini. But try and do that 3 days in a row without losing your entire 150 grand capital. It's not going to happen. And what happens when you lose your 150 grand capital? You're out of business. You haven't got a business anymore. Capital preservation, rule number one. If you don't have capital, you're not in the game. You're not in business. Yeah. Shop. Yeah. If you buy a shop, brilliant. Can you put the stock in it? And can you market it? And can you put staff in it? No. Don't buy the shop. Yeah. It's just not the way the world works. But you can sell the dream, but they won't deliver it. Pound New Zealand. Pound again. This is the main crux of my problem at the minute. Well, it's not actually, but pound CAD is getting a little bit annoying. I've got real problems with the pound at the minute. But anyway, just about to grab Trade Manager dashboard, which will help with that. Yep. Yeah, they're pretty much the same, so I was overexposed taking them both. Yeah. Best tool is Trade Manager for me at the moment to manage the risk. Not too late and take the loss if needed. Yeah. The reason I built this is because there are other trade managers out there. There's lots of these types of things out there, but they're all designed for stop loss. So they're not designed to show you positions, and most of them ignore that column. which is the most important thing. Yeah. It's how much, this is your pain meter, your drawdown percentage. Yeah. They all show you the amount of money, but the amount of money is irrelevant. Yeah. If I'm sitting on a 10 grand account, I'm in crap. If I'm sitting on a 100 grand account, I couldn't give a monkey's. That's important. That's important. Yeah. Because you need to, you know, when I was talking earlier about if you want to do this as a side income, and you want to earn 5 grand a year out of it, if you can make 25 a day, that's done, isn't it? You could, you know, as a percentage, it's going to be 0.5% or something like that, isn't it? But you've got to do it on the account. If you just concentrate on pips or you just concentrate on amount of money, it's never going to work, because risk is a percentage. Risk is not an amount of money. We need to consider that you will not get margin called in demo. Yep. So your demo account will be set up the same as your live account. So if in RoboForex, for example, if you get a 100 grand demo account, it will have the same margin requirements, the same leverage as a live account. So all the demo accounts they do. So if you go and sign up for a demo ECN account, it will only give you, no, sorry, a demo prime account. It will only give you 1 to 300 leverage. If you go and set up a demo ECN account with RoboForex, it will give you 1 to 500 or 1 to 1,000 leverage. So your demo account should always reflect your live trading conditions. The other thing that's important with your demo account is your demo account should always reflect your actual trading balance. Don't go and trade a 100 grand demo account if you're only gonna have 10 grand to trade with. Yeah, it's a complete and utter mismatch. There's absolutely no point in trading a 100 grand demo if you haven't got 100 grand. Right? Trade if you've got a 5 grand in your account and that's what you're thinking of using as your capital. Go and get yourself a 5 grand demo account. Prove to yourself what you can earn with 5 grand as a demo account. Because if you get a 5 grand demo account and you say I need to earn 20 grand a month, you're going to very quickly prove to yourself that that's not possible. That capital is safe. Yeah. Prove yourself wrong on demo. Prove yourself right on live. But prove yourself right on demo for 3 months before you even go live. Otherwise, you're just going to lose the money. You're going to get yourself into debt. All sorts of things are going to happen. I'm speaking from experience. Remember credit cards I used when I started trading? Yeah. All I did was build up 5 grand's worth of debt. I blew 3 grand accounts within 6 months. And I was like, this isn't as easy as the courses, is it? So I moved over to stocks and I moved down to scalping. And then I started scalping stocks and I started trading with high value accounts. And I was like, I can make some really serious money here. And then I tried to do it with a small account and realized I can't do it with a small account because I've got a 1 contract minimum and I over leverage. So everything you do in this job, in this industry, in trading, teaches you a lesson. And it doesn't matter how many times you learn the lesson, the market will go, you know that lesson you learned last time? I can make it harder. Yeah, the market will move where the market moves, and the market can stay in one direction longer than your capital will allow. And when you look at things like the US dollar yen, and I talk about interventions, yeah, this is the largest intervention we've ever had. Yeah, prior to that, this was the largest intervention we'd ever had. Now it's this. Yeah, and prior to that, it was that. That was the largest intervention we'd ever had. Yeah, the market will always, and there was another, that actually wasn't an intervention. That was them threatening intervention, scaring the crap out of the market, which is potentially what we're going to get now. But the market will always teach you that it is random, and it will teach you that it goes where it goes, and it doesn't matter what you have seen, it will do something different. So it's all about wrapping risk around movement. But you've got to try everything to understand it doesn't work, to get that confidence. That's what you need. You need the experience, you need the confidence. And until you get that, never ever go full time. In fact, there's an argument, to be honest, for not going full-time as a trader. I would happily run the web design company alongside the trading income. But what it does is it takes up all day, every day, which doesn't free up time for the gym. I'm going to the gym this afternoon and I'm going to a class later. I can do what I like when I want. That's what I want. I want to be able to go, screw this, after the live room, I'm going to go to the gym for a couple of hours with my oldest son. I can. Why? Because I don't run a web design company that requires me to be here looking after a telephone. I trade, which requires me to check my charts before I go, come back 2 hours later and have a look. What's happened? Nothing will have happened. That's the reality of trading, isn't it? You don't have a boss. You don't have any constrictions on time. You can do what you like when you like. The market is never going anywhere. It's always going to be here, and it's going to move up and down whether you're watching it or not. That's the beauty of it. But it makes it hard, doesn't it? Because we need to predict what's going to happen in the future, and we can't do that. Winning a lottery ticket way of trading. Yeah, it is basically. So, you know, I've done it. I've done it in prop. I've passed prop very, very quickly and very, very easily. Yeah. When you get this, when I get this account over the line, I'm on 155.5. I need to get to 159. So I'm 3.5 grand away from target, right? So what I've got on here at the moment, if I add those on, by the time I get there, will be roughly 2k, maybe 2.5. I need one trade. If this does that today before the open, which it's going to be quite hard to get there, but if it did, when the open happens, I do not need to hit any big buttons over here. I can hit that little button at the open once, go and make a tea, walk the dog, and come back and either have 150 grand of capital or an opportunity to have another go. Yeah. When that 150 grand is in XFA, I can reduce my lots down to this, because as you can see, by moving from there to there is $300. $300 is 10 grand a month. And that will be achieved by pressing that button and the market moving for 10 minutes. That's all you need. But it can also move for 10 minutes in that direction. So when you get funded, you can reduce your amount of risk down dramatically to stay in the game. But it's not that simple, because you will run a strategy and the strategy will continuously fail. So there's that argument for this is the way you earn your Lamborghinis, like the guy did yesterday. I think he ended up on 78 grand. The guy that earned 95 grand was up 95 grand. I think he ended up on something like 78. And I can guarantee you he was pressing the withdraw button. Yeah, take it. But he can't take it all. He can only take half of it. Which brings me on to something else I wanted to cover. I'm going to do prop another day. But there's another prop firm that have just removed their rules as well. I'm going to do a session on prop at some point, because I want to start doing a little bit more of it as another. It's just another sideline. Yeah, if you can earn an extra 2 to 3 grand out of prop a month, it just adds that little bit extra cash. But it doesn't cost much. This is the beauty of prop. It's very, very low startup costs as a business. Yeah. But also it's not a consistent business, and it's a very time consuming business, unfortunately, which is why I don't like it. That's why I don't like scalping. This is me trading this sort of stuff and trading this sort of stuff, because I don't have to watch it. Don't have to do anything. I don't want to be sitting there at 2:30 in the afternoon for 2 hours. Also important not to lose oversight. I guess 5 strategies in parallel are already a lot. Yeah. Different accounts for different strategies. This is the position trader account. This is the trend pullback account. This is the zone trader account. This is to be confirmed. And I've got my ORB account, which is, I don't run that on the VPS because I don't need to, because I'm trading this live every day, so I don't need to worry about that. But I'm going to put another account on here, another strategy on here, which I want to be either a breakout or a trend based strategy, but I've got the trend pullback strategy now running with fairly low capital to just want to make sure, but I will add, I'm happy to add more capital into this now. Yeah, adding another strategy, but don't forget there's only three strategies, don't forget. Yeah, that one, and that one. Yeah, the market can only do three things. It is either range bound, breaking out and then failing, or breaking out and succeeding, which becomes a trend. There's only three things, and during those three strategies it is either in a trending state or a mean reverting state. Yeah, so you don't need more than 3/4 strategies, but the ORB is my breakout strategy. This is trend pullback. Position trading is my swing strategy. And zone trading is also another swing strategy. They're both position trading strategies. So what I'm looking to do this year is to add more of this in, more stop loss based strategies. That I'm not, they're not going to be Lamborghini strategies. They're going to generate somewhere between 50 to 100% return a year. More likely, I would say that I think is more realistic, returning 25% to 50% return. So on 100k, getting somewhere between 25 to 50 grand out of it. Yeah, on a 50k account, 12.5 to 25, etc., etc. So on a 25 grand account, I wouldn't look for this to make more than 8 to 10 grand. That would be good. But if I run one of those and another one of those and another one of those, that's somewhere in the region of 30 to 50 grand, isn't it? It's just about building up your diversification, which is what has been very lacking in my trading, because I got complacent. Because what I've been doing with position trading until last year was incredibly successful every year and doubling accounts. However, last year I didn't double an account for the first time ever. So it's, again, you never stop learning in this industry. The market's always changing. Everything changes in this industry. So now I'm looking to add diversification in more. I'm also looking to trade in line with swaps more, because now the cost of trading is different to what it was 3 years ago. It evolves. This is what backtesting has a massive problem with. If you backtest a strategy now, over the last 2 years, you need to go back another 2 years. Then you need to go back before COVID, because it wasn't the same before COVID. Now, I'm now backtesting 2022 to 2024, and then I'm testing 2020 to 2022. That is now my backtesting period, because if you go back before COVID, you'll find the market very, very different. So if something survives before COVID in the robustness test now, I'm happy. If it doesn't survive before COVID, I'm not as happy, because I don't know what 2025 and 2026 are going to do. They're either going to be like this, like that. So interest rate drop, interest rate rally, or interest rate freeze before COVID. Those are the three main things interest rates generally tend to do. Most of the time they're moving up and down a lot all the time. Sometimes they go up, down, up, down. What we had here was that. What we're having here is this. What we had before COVID was, holy crap, it was all over the place, basically. So, you've got to have diversification, because the market's going to be totally different every year. And you've got to change with it and adapt. Nothing's going to work forever. Yeah. Position trading works all the time, because that is what the market does. As long as the market moves, as long as the market swings and we have market structure, position trading will always work. Range trading, breakout trading, and trend trading will always work. It's just in different years they're going to work to different degrees. Yeah. All the breakout traders and all the trend traders since the 18th of December have been pulling their hair out. All the mean reversion range bound traders have been going, this is the best thing since sliced bread. Yeah, if you have all three of those strategies on, yeah, this one's going to be paying you tons of cash. And as long as you're limiting the risk on the other two, your P&L on this one does that, your P&L on the other one does that, and your P&L on the other one does that. The overall is a gain. Running three strategies. Diversification. But you only need three. But if you have six, that's great. You've got diversification on a strategy. So if you have two mean reversion strategies running, one using Bollinger Bands, one using ADR, they're going to give you different signals, different trades, but doing the same thing. Yeah. So you're diversifying an individual strategy. There's three strategy types. If you have two strategies of each type, you've got six strategies running. That's really good diversification. So would you say there is any prop firm that is position trader friendly? No. I passed with the fivers last year. I also failed with the fivers last year. So sorry, move my blind. Getting blinded. The problem with position trading is it's long term. So an evaluation on position trading is going to take you a long time. Most of them have got a 5% intraday rule, which means that's a fail. Yeah. Forget the fact that I'm 0.75 away from target. That's a fail. Yeah. Rules are there to be broken. Yeah. And the rules are specifically restrictive to make sure that successful strategies are less likely to perform. Yeah. So they know that the banks and institutions are not getting in here with a stop loss there looking for a 10R. They know that the banks are getting in short and scaling into an accumulation in a position before they move it. This is what works because you can't tell which way it's going. The market will move up and down. So therefore you need a strategy that does the same as the market does. Yeah. So those types of strategies they don't allow because they're successful. If they really wanted to allow you to prove yourself as a trader so that they could fund you with real capital, they would allow you to position trade. Because if they went into any bank in the world or watched the Bloomberg channel, they would hear people using the term dollar cost averaging all the time because that's all they do. But they don't. Why? Because they're not interested in funding you. They're interested in taking money out of your pocket to give you the dream that you're not going to be able to achieve. So what they do is they just take all your money and then you get a funded account and then you don't make it in the funded account. So you give them more of your money. Yeah, that's the job. That is prop. But if you know how to play prop, then you'll be fine. You know, one of the strategies people use on prop is you get an account with Top Step, you get an account with my forex funds, and you get an account with Take Profit Trader. You go long on that one, you go short on that one, and you wait an hour, you go long on that one, for example. Yeah. If you put a stop loss at maximum drawdown for the day and a TP at the same, you are guaranteed to have a profitable day. So aim for your target. One of them will pass. Simple as that, isn't it? It's not hard to get funded. It really isn't, if you know what you're doing. But it's going to cost you more money. So Top Step, blue. My forex funds, blue, for example. Take Profit Trader, pass, funded. Or split it over 2 days if you want, or 3 days, or however you want to do it. But it, you know, the market's binary, it goes up and down. Yeah, if you press the buy button on one and the sell button on the other, one of those trades is going to work. Most of the time. I mean, there are exceptions. You get stopped out on one, you know, but most of the time. Just on some of the rules are unrealistic for position trading. Yeah. So as I just said, 5%ers have a maximum drawdown of 5%, which seems doable with low risk. Yeah. So you'd need to be using somewhere in the region. I mean, the way I passed the fivers was following religiously exposure rules. So that's okay. That's okay. That's okay. That's okay. That's okay. That's okay. That's not okay. Yeah. So look at my drawdown on the pound. 4%, 4.5, 4.7. So 4.7% drawdown of that 12. So take 2 of those out of the equation, you're within the drawdown limits. So if you follow exposure rules, you'll be fine. Aussie dollar, US dollar, New Zealand dollar, US dollar. Don't trade them both. Trade one or the other. They're going to do the same thing. Aussie CAD, New Zealand CAD, same thing. Don't trade them both. Aussie and New Zealand, there's an argument for taking one of those out of the equation completely and either trading the Aussie dollar or the New Zealand dollar. Just remove one. But, you know, the trouble is the New Zealand dollar will set up with an ADR reversal and the Aussie won't. Yeah, so you'll be trading the Aussie and you'll see that beautiful New Zealand dollar reversal off of ADR and you won't be in it. And you'll be like, oh, I'm going to trade the New Zealand. Some days they'll both hit and you'll be in both of them and they'll both work. But some days they both won't work. And that's where you're going to get big. So, you know, if you reduce your risk down by 50% and trade everything, it's pretty much the same as following exposure rules and having a decent amount of risk on. But yeah, fivers is the one I passed with. Audacity Capital. There's loads of them out there. But for me, I'm much more interested in trading futures because you get the moves faster on the stock indices. Yeah. It's much quicker price action. Just going to try a quickie there. See if we get a double bottom. The extra risk is going to be $30 for potentially huge upside, but it probably won't work because it's coming down. But yeah, futures is faster. So it depends the type of trader you are. If you want to trade swing, then yeah, trade you know, with the fivers and Audacity and that. But if you want to trade futures, Top Step, Take Profit Trader, there's a few to choose from. Prop boils down to luck. You need to get started on a winning streak to stand a chance. Yeah, stopped out of that one. See, 2 cracks at the market during Globex. It's cost me $157 of a 155 grand account. Doesn't matter, does it? It's either doing that or it's doing that. So at the moment, we're looking at a 50% retracement potentially. See, that's why I added one there, because I was hoping that was going to be a 50% double bottom. But I'll have a crack here. Stick one in down there. Oh, all right. I'll stick another one in down there. But yeah, there is a lot of luck involved in trading in general, not just in prop. You know, this is the thing that people underestimate massively. Yeah, the amount of people I see on forums and things ignoring the news is unbelievable. They just don't pay any attention to it because they think it spikes the market. It doesn't spike the market. It drives the direction of the market. If inflation is going up, interest rates are going up, the currency is going up. If that number comes out massively higher than the forecast, it's going up. You can't ignore what makes... It's like saying, I'm going to become a mechanic, but I'm not going to bother with the engine part. I'm just going to look at the steering wheel and the wheels. Pointless. Yeah. But a lot of trading is perceived as lucky because I go long on the Canadian dollar today, and next Tuesday the CPI number comes out at 3.1. Boom. Lucky that that came out at 3.1, not seeing the future, getting the entry right, having the right stop, not having got out on a pullback or any other reason. It's because that moved. Is that luck, or is that just happening to fall in line with fundamentals? Was I expecting it? No. If it happens, lucky. Yeah. I took a trade on this yesterday. I made $850. I think it was yesterday. $892. Yeah, I made $892 yesterday because I got in long here, and it did that for 60 minutes. Is that luck, or did I pick the bottom? I got in here because it was low risk, and I thought if I can get up to there, that would be a nice trade. I should be able to make $1,000 out of it. I was already down at the time, but what happened was it pushed for another half an hour, so I got out there and I turned a losing day into a winning day. Was it luck? What is luck? You know, it's binary, this thing. Yeah, I could get it wrong 5 times in a row. I did here. I got it wrong many times in a row. I think I took 32 trades yesterday. I think it's my biggest day. 38. Yeah, 11 trades, 2 trades, 30 trades, 38 trades. Yeah, took 38 trades yesterday, 892. I was down about $1,000 yesterday, and I popped it up to there. But it's losses, small losses, small losses, small losses, big wins in futures, because you're looking for that movement. That's all you need. You need one of those. If every single stop out is that big and your winners are all that big, it's hard not to make money. But it's getting 10 of those in a row on the wrong type of day that kills people. And this is where prop fails, is because you are either a mean reversion trader or a trend trader every day with futures. So it's not the sort of thing you can only trade one strategy on, because you need to adjust and adapt to what the market is doing within that 3-hour time period. You've really got to make money. So if you need to be able to be good at range trading, mean reversion trading, you need to be good at trend trading. I'm trying to catch the next leg up here. This is what I'm doing. I'm trying to be a trend trader. If this is going to do this for the entire session, I am just going to lose money all morning. Yeah. Identifying that and going, stop, is where you make money. Wait till the open, because it's not the right market. If I turn myself into a range trader after I've seen this ranging for 2 hours, you can guarantee that's when it's going to start to trend. Again, I'm going to be wrong, because I'm going to try and mean revert the trend. You know, it's just, that's where I think the luck comes in. Look at this day here. 11 trades, 2 trades. I mean, that was trying to trade just to get a trading day on. Yeah, 11 trades to make $3,000. Why did I take half as many trades, or a third as many trades, or a quarter of as many trades as those days and make twice as much money? Because I had a couple of misfires at getting into a trend on an opening range breakout, and then I caught the opening range breakout and it went parabolic to ADR. Lucky, or just risk management? It's an impossible thing to classify luck, isn't it? Same as winning the lottery. Yeah, you either are or you aren't. But you know, there is luck involved in trading, a lot of luck involved in trading, because if you are trying to do an opening range breakout for 5 days, and for 5 days it doesn't have any opening range momentum, that's unlucky. It's not, it's just what the market does, but you will classify it as being unlucky. It's just different, isn't it? Today's a good example. Look, just not going anywhere. Yeah, you're not going to be a breakout trader today. You're a range trader today. But I didn't know I needed to be a range trader today until now, and it's too late, because I can't see in the future. Do I need to be a range trader on the FTSE until the New York Open? Or should I now be a trend trader looking for a breakout? I don't know. if I pick the right type of strategy and the market does the right thing, I'm lucky. Or am I just good? You know, there's no, I don't think there's an answer to that one, is there? Anyway, I'll stop waffling now. It's 10:30. Right, so I will be back tomorrow afternoon. Now, Thursday this week, the next members stream, I had penciled in to do RSI mean reversion and sorry, the embedded RSI strategy. I'm struggling with it, to be honest. I'm struggling to find a good way to make it work. So I'm going to do a little bit more testing today and tomorrow and see if I can find something that is useful within the testing that we can look at. But I'm struggling, I have to admit. The only way I can make it really profitable is using some kind of martingale, and I don't like to do it. So it does work, but it needs a lot more work. It needs some filtering or something. It needs something. There's too much randomness in it at the moment. So I'm going to spend a bit more time testing on it. So on Thursday, we will either do this or I'm going to look at doing something on news trading. Okay, so again, with diversification, I'm looking to this year add news trading into my portfolio. After news trading, I should say, not trading the news, trading after the news. So I'm going to be building an EA to model all news events so that we can do some in-depth analysis into news and post-news market movement. So I might cover that on Thursday. I've also got a session planned on futures prop as well on Thursday, so or to come. So I'll pick one of those depending on how far I get with this. But again, I'm just finding the same old thing here. I'm not finding anything exciting or anything that I can't replicate with any other strategy. So I'm going to keep working on it though, because I think there is an edge here. Well, there definitely is an edge here, but I want to try and find an edge without using martingale, and that's where I'm struggling a little bit. So I will let you know what we're going to do on Thursday. Any questions, let me know. I'll be in Discord. Other than that, I will be back tomorrow afternoon for the New York session and futures. And then we're back on Thursday, all right? So have a good day. Anything you need, let me know. Other than that, I hope you enjoyed that one, and I will see you next time. Have a good day.